We're seeing an uptake, as we said, on the Nairobi Stock Exchange based on that Kenol Kobil move up to 8%. What is your view on the share split?
Well, you can see certainly for Kenol Kobil, investors have decided to stay put, anticipating a share rally in the next coming weeks. And certainly our views on Kenol Kobil, we are positive on the oil marketer in Kenya, given their positioning and unique market strengths and the critical mass capabilities they have within the region. So what we expect in the coming weeks, the share price might gain even more, the price might rally more because investors have decided to stay put, anticipating higher returns from the stock.
How high can it go? What are your expectations?
Well, that's pretty hard to say, but it's possible the stock might go up depending on how soon the anticipated share split will be effected. But the important thing to note is that the valuations are quite attractive, and for an oil marketer trading at those multiples, investors are seeing value, and that's why there's increased demand for the stock. Also, given the fact that the supply on the stock doesn't come very easily.
Right, I just want to move on to get your view on a couple of other stocks. We've got Kenya Commercial Bank, which is the country's largest bank by assets, due to hold its annual general meeting. And top of the agenda there is, of course, going to be that 1.1 billion new ordinary share issue. What is your view on this? Is it going to happen, and what are they going to use the money for?
Well, the company has not been very clear on the use of funds, but I can speculate and say mainly to increase the loan maturity profile of their loan products. You can see the scale and nature of expansions they've been doing in Kenya and in the regional markets. So mainly, I think this is mainly to bolster the balance sheet, to be able to give longer maturity profile loan products, to lend more in the market, especially in the new regional markets. But it's not been very clear what kind of investments the bank is going to make. But it's very possible that the rights issue will be done in the next couple of months.
Mm-hmm. Moving over to another bank, NIC Bank, out with results yesterday, reporting a pre-tax profit up of 42%, and also a jump in quarterly non-performing loans. What did you make of the results?
The results are, it's reasonable to say that they were within expectations, that the loan book has grown, the deposits have grown. We can see that the economic recovery is certainly having an impact on the income statement. You saw the 42% growth in interest income, growth in non-funded income. That tells you the business volumes are growing, and that people are willing to take on credit. So it's actually part of the positive things we've noticed about the financial sector in general.
Gregory, is that mainly due to their operations in the rest of the region as well?
No, mainly it's attributable to the key market, which is Kenya, because mainly the exposure in East Africa is mainly in Tanzania. So I can mainly attribute this performance to the economic recovery in Kenya.
I wanted to also just get your view on the Central Bank of Kenya saying that it has issued new regulations that allow banks to provide more services through contracted third parties. Is this going to be a positive development for the banking sector as a whole?
Yes, this has been a positive development, and the banks have been lobbying for the introduction of agency banking for a while. And the introduction of agency banking in Kenya we'll see more business, and the banks will now be able to reach part of the unbanked population, and it will increase new revenue. It will bring about new revenue channels, given that nowadays banks are even looking for growth that will come not from just the traditional brick and mortar type investments, but now they have agents out there who can be able to get customers for the banks. So I think it's a positive thing for the banking sector in Kenya.